After this call, I will be publishing your first quiz. Did you take a quiz before? Were you able to take the quiz I have published before the resetting of Canvas? Wala, no?
Wala, miss.
Okay. Because what happened was that they had performed a reset in Canvas, so we need to upload everything again. So after this call, I'll be uploading your first quiz, which I will give you a full week to finish. So very short quiz, just 10 questions, I think. That was 10 questions. Then you can answer it on your most convenient time. Basta I'll give you 7 days within which to finish it. Okay. So we discussed the definition, basic definition of taxation, and we were also able to discuss the purposes of taxation. Then we also discussed the inherent powers of the government. Here, I think I wasn't able to discuss this. So we have aspects of taxation. The two aspects of taxation is levy and collection. So levy is the imposition of the tax itself. So levy happens when the Congress enacts a tax law that would support the imposition of a tax to a specific thing. So levy is simply the imposition of the tax. And this is under the duty of the legislative branch of the government. On the other hand, collection. So after we impose taxes upon persons or properties or any other taxable entity, we now proceed to the collection of taxes. So, collection of taxes may be done by the executive branch of the government, particularly BAR and Bureau of Customs. So, when levy is primarily vested in the legislative branch of the government, collection, on the other hand, is delegated to the executive branch of the government. Okay, so we have levy and collection. Then we're done discussing this basic principles of a sound tax system. Just remember that the non-compliance of these basic principles would not automatically render a tax law null and void. So, meaning to say, even if these three principles are not followed, it doesn't mean that the specific or the certain tax law that is not in compliance with these basic principles are void. It is still valid. Okay. Then we also mentioned that the power of taxation is subject to constitutional and inherent limitations. So remember your inherent limitations, guys, your PNIS. Now, focusing on the last one, which is situs or territoriality, let's expand this one. So, what is situs of taxation? Okay, so it depends upon the subject matter of the tax. So, what is being taxed? If what is being taxed is a person, the situs, when we say situs, is place or the territoriality. Okay, so when we say persons, if a person is taxable, then the situs of such person is its residence. So, residence of the taxpayer. So, meaning to say, those persons residing permanently abroad are beyond the taxation power of the Philippine government because the situs or the place of taxation is with respect to residence, and then residence is beyond the jurisdiction of the Philippine government. Then if what is being taxed is a real property or tangible personal property, the situs is the location of the property. When we say real property, it is property attached to land, so fixed, immovable property, such as land itself. So if you own a land or if you own a building, so a building is an immovable property. It cannot be moved from one place to another. So if what is being taxed is a real property, then the situs is the location of the property. So, for example, if you have a land in Japan and you are to sell the land to another person, it is a taxable transaction, right? But is it taxable in the Philippines? The answer is no, because the situs is in Japan and not in the Philippines. So this beyond the taxation power of the Philippine government. Same goes with tangible personal property. When we say personal property, it is the opposite of immovable. So it is movable. And then we classify or we qualify it further as tangible. When we say tangible, these are properties that you can actually see and touch. Like for example, your car. Diba? Your car is tangible and it is a personal property. Your cell phone is a tangible personal property. Your laptop is a tangible personal property. So if you are to sell these things, the situs of taxation is the location of your property. So, for example, if your car is in Cebu, then it is taxable in Cebu. If your car is in Manila, then it is taxable in Manila because the situs of your car is the location of such car. Then we have intangible personal property. So, intangible meaning to say you can't see it. So it's like it's only a right, right. So for example, if you are an inventor and you have your invention patented, right? So the patent is a right given to the inventor so that other persons could be barred or prohibited from uh, manufacturing or producing that same product or that same thing that you have invented. So your patent is a right, okay? And then that right can be sold, although it is intangible, right? So the intangible personal property has no specific location because you can't see it. It's a right. You can't see it. It's intangible. Therefore, the situs of taxation of an intangible personal property is simply the domicile of the owner. Domicile is the as opposed to residence, because residence is temporary, domicile is permanent. Domicile is the permanent address of the owner. So wherever is the permanent address of the owner, that is the situs of taxation. So for example, you are a Filipino inventor and you are a holder of a patent, and then you went to Australia, and then you've met their businessman who wants to buy your patent, and then you agreed. So you executed a deed of sale in Australia, and the government now is trying to tax your transaction, sales transaction made in Australia. Is the government correct in saying that it is taxable here in the Philippines? The answer is yes, because even if um, the sale was made in or executed in Australia, your domicile as the owner of a patent is still here in the Philippines. Therefore, the situs of taxation of such patent that you have sold to the Australian person is still here in the Philippines because in the Philippines is your domicile. So it is taxable here in the Philippines. Then for income, if what is taxed is income, then it is the situs is the taxpayer's residence or citizenship or the place where the income was earned. If what is taxed is business, occupation, and transaction, the situs is the place where business is being operated, occupation being practiced, and transaction completed. So, for example, me, I'm a certified public accountant. So, as professional guys, professionals are liable to pay what we call the professional tax. Okay. So before we are allowed to practice our profession, meaning to say before we are allowed to use our profession for a living, we need to pay professional tax. Now, say for example, I live in I live in Talisay, and then I am practicing my profession in Cebu City. Now, can the Talisay LGU impose the professional tax on me being a resident of Talisay? The answer is no, because the situs of taxation of my occupation is in Cebu City because I am practicing my profession in Cebu City even if I am living in Talisay. So therefore, the situs is in Cebu City and not Talisay. Thus, I should pay my professional tax in Cebu City and not Talisay. Because again, the situs is where my occupation is being practiced. Then we have gratuitous transfer of property. The situs of taxation for such thing is the taxpayer's residence or citizenship or location of property. So, for example, you have a land in Davao, and when we say gratuitous, meaning to say you transfer your property without any cost. Like, for example, through a donation, or it could be through a donation or through inheritance. So you died and then your property is transferred to your son or daughter. Diba? It's gratuitous because they don't have to pay anything. So where should the the land or property be taxed? It is where the property is located. Okay. So these are the rules for the situs of taxation. Why is it relevant? Because it is one of the inherent limitations. PENIS. So S here, situs or territoriality. And then we have some doctrines in taxation. We have prospectivity of tax laws. So when we say prospective, now and future. Okay, so it doesn't go back in the past. So again, meaning to say if you have a transaction before, let's say 10 years ago, and then during that time, that transaction that you have entered into is not taxable. And then let's say this year, Congress passed a law taxing or imposing a tax on that same transaction that you had 10 years ago. Can BIR run after you because simply because you made that transaction 10 years ago and then there is now a corresponding tax law taxing such transaction? The answer is no, because tax laws must be applied prospectively. So now and then in the future. Double taxation. Double taxation could be direct or indirect. When we say direct double taxation is unconstitutional. When we say unconstitutional, it is null and void. Therefore, if you are taxed for the second time and such tax is considered a direct double taxation, then you can refuse. You can refuse to pay for that tax. When can we say that a tax is considered a direct double tax or direct double taxation? When the following are present. All of the following must be present. The tax is imposed in the same subject. Okay, same subject for the same purpose, same taxing authority, same jurisdiction, same taxable period, same kind or character. So again, let me repeat. It is direct double taxation if all of the following are present. Same subject, same purpose, same taxing authority, same jurisdiction, same taxable period, and same kind or character. So for example, um, you have a business, and then within your local LGU, let's say I have a business here in Talisay. So let's just say the city of Talisay imposes a business tax on my business. So I'm paying business tax. And then at the same time, BIR collects income tax from me because of course I'm earning income. Can I refuse? For example, I will refuse BIR. I will say nga, Oy, BIR, I already paid tax for my business here in Talisay. Why would I pay the same tax to you? Isn't it unfair? So can I invoke direct double taxation? Because BIR, I learned in our tax class that direct double taxation is unconstitutional. It is not valid. So I shouldn't pay you. Is that correct? The answer is no, because again, as I have mentioned from the list, same subject, same purpose, same taxing authority, and so on. It doesn't comply with all those requirements, right? Why? Because in my example, we have different taxing authority. The first is business tax imposed by the LGU. The LGU is our first taxing authority. The second one is national because BIR is in charge for collecting national taxes. So, not all lists there, kato akong giingon, are checked. So meaning to say it becomes an indirect double taxation because in our case here we have different taxing authority, so it becomes indirect double taxation, and indirect double taxation is allowed. What is only prohibited is direct double taxation. Now, set off of taxes. When we say set off, more siya og, quits. It's like saying, if you owe me and I owe you, then quits na tayo. Diba? Set off of taxes. However, setting off of taxes is not allowed here in the Philippines. Meaning to say, even if the government owes you something, and then you owe something to the government as well, even if the government will not pay you pa sa iyahang utang, you are still obliged to pay for your taxes. All right. So, for example, guys, let's say last year you overpaid, so you ask for a refund. Okay, you ask for a refund. Then the government will say, okay, the government has already acknowledged that the government has to issue you a refund. And then this year, you incurred tax liabilities. And then, pending the issuance of the refund, you actually told the BAR nga, you will not pay because they owe you something also. So you say, set off na lang, quits na lang tayo. You can't say that, okay? So, in our jurisdiction, Philippines, setting off of taxes, we call it equitable recoupment. Okay, you might have crossed um you might have heard this doctrine of equitable recoupment. So it is the process of setting off of liabilities. If you if you owe something from the government and then the government owes you something as well, then you can set it off. It's called doctrine of equitable recoupment. However, this doctrine finds no application here in the Philippines, so you can't invoke doctrine of equitable recoupment. And then we have escape from taxation. Escape from taxation could be tax avoidance or tax evasion. When we say tax avoidance, then it is a legal siya, allowed. It is legal. Legal means of minimizing your tax liability. Tax evasion is illegal. It is a uh, deliberate changing of your numbers just to have a lower tax. So, for example, you had sales of 1 million, but then you don't want to pay higher taxes. So instead of 1 million, you have reported your sale at 100,000. That one is tax evasion. Okay. Tax avoidance, on the other hand, is legal. So you need to have thorough understanding of income taxation. So you could do tax avoidance. Say, for example, let's say you have a property and then you want to give it to your boyfriend or girlfriend because you are so rich, then you know that the tax rate for donation is too high, considering that, say for example, your property is expensive, has a high value. So you would want to pay lower taxes. So if I am your tax lawyer, I would encourage you, I would advise you to not give the property in full. So tingi, like for example, by installment. Let's say this year you will give 25% of the property. Let's say it's a land, so 25%. And then next year is 20%. So if you do that, then the value will be decreased. And then if it doesn't reach a specific amount, the tax rate is zero. So that one is tax avoidance because you don't have to pay tax at all. But eventually, the property will be transferred to that person. So yeah, tax avoidance is allowed. Another term for tax avoidance is tax minimization. Tax minimization. So here we have the essential characteristics of tax. So we say that tax is an enforced contribution. Enforced because we have no say over it. We can't The government, in fact, doesn't need our consent before they can collect taxes from us. It is levied by the lawmaking body. Sorry, guys, for the dogs. I'm not sure why they are so noisy right now. It is levied by the lawmaking body, so we know for sure the taxes or the power of taxation is exercised by the lawmaking body, which is the Congress here in the Philippines. It is proportionate in character because there you have a tax percentage. You simply have to multiply it to that specific amount to get the correct tax. And it is generally payable in money. So you can't say to BAR, for example, nga, can I pay my taxes by, because I have a lot of cars, can I just give you my car as a payment? So you can't say that even if your car has a more expensive value as compared to your tax liability. So say for example, you owe the government taxes of 100,000, and then you say nga, I don't have enough cash, but I have this car. It's worth 1 million. Can I give it to you instead? So that's a no-no because taxes are generally payable in money. And it is to be used for a public purpose. Because if it is not used for a public purpose, then the collection of tax is illegal. Okay, you can actually sue the government in court. Then we have classification of taxes. Okay. So classification of taxes as to subject matter or object. Personal. Sometimes personal is referred to as poll or capitation. POLL. Poll or capitation. This is a tax of a fixed amount imposed on individuals, whether citizens or not, residing within a specified territory. Meaning to say, those taxes imposed upon the person, regardless of your citizenship, as long as you are a resident of this uh, place, you are being taxed. That one is classified as a personal tax because it is imposed on the person itself, regardless of your income. As long as you are a person, okay, as long as you are a person residing in a specific place, you are being taxed something. So that tax is considered a personal tax. An example is your cedula, right? So Sadala is commonly referred to as community tax. So if you are a resident, let's say me, I'm a resident of Talisay. So Talisay City imposes community tax on me. Even if, for example, I don't have any income, I don't have any property, by the mere fact that I am living in Talisay, I am impose or the Talisay city government can impose community tax on me. Okay, so same thing if we have, for example, here a foreigner living in Talisay. So even if he is not a Filipino, so regardless of citizenship, as long as he is a resident of Talisay, then the city government of Talisay can impose a community tax on that foreigner. So the community tax is classified as a personal tax because the subject matter is the person itself. Okay, regardless of income, property, and whatsoever. And then we have property. From the name itself, property. This is a tax imposed on property. So, for example, if you have a real estate here in Talisay, then the city of Talisay can impose a real property tax or real estate tax on your property situated within the jurisdiction of Talisay. So in this case, what is being taxed is not you as the owner, okay? What is being taxed is the property itself, not you. But it just so happened that you will be the one to pay because you are the owner. But then you have to take note that even if you are the one paying, you as a person is paying, what is being taxed is not you, but your property. Okay, so real estate tax is an example of a property tax. Then we have excise. Excise tax is a tax imposed upon the performance of an act, the enjoyment of a privilege, or the engaging in an occupation. So, mura siya og privilege to do something. So, for example, you have a property and then you want to give it to someone else, diba? Donation. That's what we call donation. But before you can effect donation, before you can execute a deed of donation, you have to pay for the tax, donor's tax. And why is that? Because you are asking the government to allow you to transfer. So the consent of the government, when you say, okay, you are allowed to transfer your property from you to another person, that is actually a privilege given to us by the government. So since we have that privilege, the privilege to transfer our property to someone else, then we have to pay a tax on that, donor's tax to be specific. So the donor's tax is classified as an excise tax. What else? The privilege of transferring your property when you die to your heirs. It's also now a privilege because without the government saying, okay, you can transfer it, then you can't transfer it. But it's just that the government has allowed us to pass on our property when we die. So before your property could be legally transferred to your heirs, your estate must pay an estate tax. Okay? So estate tax is a tax on the privilege to transfer your property when you die. So therefore, estate tax is also under the classification of as excise tax. Right? What else? Like my in my example a while ago, professional tax. Okay? Professional tax is being imposed to us for engaging in a profession or an occupation. So, because it's just saying we are asking the state or the government to allow us to do our occupation, to practice our profession. So, since that is a privilege granted to us by the government, tanan na lang no. Since that is a privilege to engage in a legal occupation. So, the professional tax that we are paying is considered as an excise tax because again excise tax are taxes imposed upon a privilege to do something. Okay, then another classification is as to who bears the burden. It could be direct or indirect. When you say direct, the burden cannot be passed on from one person to another. Example, I am an employee. As an employee, I am earning salary, right? So my salary is being deducted for income tax on salary, right? So my income tax on salary cannot be passed on from me to another person. I couldn't say to BIR nga, can I just transfer this salary tax, okay, income tax on my salary to someone else? Can I do that? So no, because it is a direct tax. So katong donor's tax, income tax, community tax, these are direct taxes because you can't pass on the burden to someone else. Indirect tax, on the other hand, in this case, you can pass on the burden to another person. You can shift the burden to another person. An example of an indirect tax is VAT, Value Added Tax. Imagine this, for example, you are in the business of, let's say, selling mineral water. Okay? So if you buy mineral water from your supplier, di ba? The resibo, if you look at the receipt, it has VAT on it. So that means you paid VAT for it, right? And when you sell the same mineral water to your customers, you also impose VAT, right? So it's just like you are asking reimbursement from the customers. Okay, you paid tax to your supplier, but when you sold the same mineral water to your customers, you still ask for VAT also. So it's like net effect, right? So it's like nabawi mo ba? Nabawi nimo. So from you being burdened to pay VAT, You passed on the burden to your customers because they are now the ones paying the VAT. So VAT is an example of an indirect tax. And then as to determination of amount, we have specific and ad valorem. Specific is a tax imposed based on physical unit of measurement. So the tax imposed is based on physical units of measurement. So, say for example per kilo or per volume of whatever. So that is specific. But when you say ad valorem, if the tax is imposed based on the value of the property itself. So regardless of the measurement, regardless of the number, weight, length, or volume, you just look at the value of the property itself and then you impose the tax based on the value. That is ad valorem. Then we have as to purpose. Purpose could be general fiscal or revenue. This is the same, huh? When you say general fiscal revenue, meaning to say if the tax is for revenue raising, that is general fiscal or revenue. If a tax is imposed for special purposes, so we have it under special or regulatory. Remember, diba, the purpose of taxation could be primary or secondary. So it's just say pareha ni as to purpose. So when we say primary purpose, that is revenue generating to raise income. Secondary purpose katong regulatory, like for example to stabilize the a specific industry, let's say sugar industry or the coconut industry, or to boost local production and so on. So kana siya nga purposes are under special or regulatory. And then as to authority imposing the tax. So the authority could be a national our national government or our local or municipal government. So like in my example, for income tax is imposed by the national government. Ang timailan ani, you have to remember this. Who collects the tax? If the one collecting the tax is BIR, then the tax is national. If the one collecting the tax is your municipal treasurer, your city treasurer, then that is municipal or local tax. Okay, example, your community tax, your cedula, where do you pay your cedula? Is it in BIR or in your city or municipal treasurer? You pay your cedula in your municipal treasurer, sometimes gani in your barangay treasurer, right? So community tax or cedula is considered as a local tax. Next, where do you pay for your income tax? When you have a business, di ba, you're earning income. At the end of every quarter, you have to pay income tax. Where do you remit the money? It's in BIR, right? So, mean to say, income tax is a national tax, right? What is the um, tax law supporting national taxes? That is your National Internal Revenue Code, NIRC. Inside NIRC, you can see there income tax, which is our subject, right? Income tax. How about for local taxes? What is the legal basis? The legal basis for local taxes is the ordinance or the ordinances. Ordinances issued by the local sanggunian. When they issue ordinances imposing taxes upon persons, property, or any other activities made inside their jurisdiction, local jurisdiction, then the ordinances are considered as the legal basis in imposing the tax. And then as to graduation or rate, when we say proportional, you have a specific tax rate and then you just multiply it to the value. When we say progressive or graduated, you have a tax rate, but the tax rate changes. The tax rate is higher when the income is higher. The tax rate is lower when the income is lower, and that is progressive. Then when we say regressive, baliktad sa progressive. The higher the income, the lower the tax. The lower the income, the higher the tax. That is regressive. Okay. Now, which of these three, proportional, progressive, regressive, supports our one of our basic principles na theoretical justice? Which one do you think?
Miss?
Which of these three, proportional, progressive, regressive, supports our theoretical justice nga basic principle?
Proportional.
Proportional. Well, proportional is a fixed rate. Just you just have a fixed rate, say for example 10%, then you just multiply it to whatever value. Answer is progressive. Okay, so progressive, because diba, what does theoretical justice says say? It says that taxes must be based on our ability to pay. So when you say ability to pay, your level of income. Therefore, if you have a higher income, then you should pay higher taxes. If you have a lower income, then you should pay lower taxes. That one is progressive. All right. So in fact, the 1987 Constitution says that the Congress should evolve a progressive system of taxation. It's mandated in the Constitution. Then we have sources of tax laws. Firstly, we have Constitution itself, our 1987 Constitution. Um, there are several provisions there supporting our imposition of taxes, and also in the Constitution, you can also find mga entities exempt from taxation. Then we have statutes. Statutes are laws other than a constitution. Diba? A constitution is a law. But the statutes are kanang mga RA, mga Republic Act, Batas Pambansa, bilang whatever. Okay, those are what we call statutes. And then we have the presidential decrees. So presidential decrees are issued during the time of Marcos when he abolished the legislative department. Like he was the president and at the same time he is the legislative department itself. Okay, so presidential decrees. But we don't have presidential decrees anymore because we have a separation of powers, the executive and the legislative. It just so happened that during the time of Marcos, there was a merging of the executive and the legislative department. So the president can also pass laws, but that's not applicable during this time. Then we have revenue regulations by the Department of Finance. Take note that the head of the Department of Finance is referred to as a secretary. So, kinsay head sa Department of Finance, Secretary of Finance. So, it is the Secretary of Finance who issues revenue regulations. Then we have rulings issued by the CIR. CIR is the head of BIR. CIR is Commissioner of Internal Revenue. So the Commissioner of Internal Revenue issues rulings. The Secretary of Finance issues regulations. Those are two different things. All right, remember that. So if you are Secretary of Finance, what you can issue is revenue regulations. If you are the Commissioner of Internal Revenue, what you can issue is rulings. If you are the Secretary of Justice can issue opinions. Okay, so they have different roles here. Re- uh, when we say revenue regulations, it's like an explanation of a tax law. Explanation. Rulings issued by the CIR are those decisions. For example, when we have tax disputes, the CIR will rule upon the issue. So the CIR issues what we call rulings. Opinions by the Secretary of Justice. This is used when, for example, let's say your sanggunian, local sanggunian, issues an ordinance imposing a tax on persons residing in the local LGU. Then, for example, you want to question the validity of the ordinance. Okay. You question it before the Secretary of Justice. Then the Secretary of Justice will issue an opinion whether the ordinance is valid or not. Then we have decisions of the Supreme Court and the Court of Tax Appeals. So, for example, if you have, let's say, issues regarding tax disputes. So, for example, no, you went to BIR and then you want to protest a specific tax nga gi-collecta from you. Then the CIR will issue a ruling, di ba? Now, if you don't like the ruling of the CIR, You go to CTA, Court of Tax Appeals. Okay? Go to CTA. And then the CTA will issue a decision. If you are still aggrieved, you don't like the decision of the CTA, then you file an appeal in the Supreme Court. Then the Supreme Court will have the final say. So the decisions of the Supreme Court and the CTA, if wala na kaniad to sa Supreme Court, direct ka sa CTA, then they are considered sources of tax laws as well. Because the Supreme Court may also make an interpretation of what this tax law is all about. What does it really mean? Because some tax laws are vague, uh, doubtful as to interpretation. So whatever it is that Supreme Court has interpreted, that is already final. We actually call it jurisprudence. Okay, jurisprudence. So you can say decisions of the Supreme Court, medyo mahaba man, di ba? So you can actually just say jurisprudence. That's the same thing. And then another source of tax law is your LGU ordinances, as I have mentioned, for local taxation. And then lastly, we have treaties or international agreements. So for example, if our government will enter into an agreement with another country, and then if the subject involves taxation, say for example, the Philippine government has exempted another um, government, another country, exempt niya from taxation here in the Philippines if they do business here in the Philippines, then that one also is considered as a source of a tax law. Then we have here the powers of commissioner. Now let's just make this clear. Um, Imagine this: you are looking at the executive branch of the government, right? So the on the topmost portion, you can see there the president, right? So if you look at the hierarchy, ba, so on the topmost portion, we can see the president, and then below the president, you have the different departments, right? So one of which is the Department of Finance. So president, and then below niya, see Department of Finance, headed by your Secretary of Finance. Then below the department has different bureaus. Okay? So below the department, na ay daghan na mga bureaus. So under Department of Finance, you have Bureau of Internal Revenue, BIR, headed by your Commissioner of Internal Revenue. Still also under the Department of Finance, you have Bureau of Customs, headed by your Commissioner of Customs. Okay? And then under sa BIR, so it's like you have there a drawing, diba? So president, then below president, Department of Finance, headed by the Secretary of Finance. Then below it, we have BIR as headed by your Commissioner of Internal Revenue. And then below BIR, you have your RDOs, Revenue District Offices. So the revenue district offices have numbers. So for example, in Mandaue, if you have noticed, there is a BIR office there. It is an RDO, Revenue District Office. I think it was RDO 080. And then for Cebu City North, we have BIR 081. Yeah, BIR 081. And then BIR Cebu City South. But there are two BIRs in Cebu City, the one in Banilad and the one in Mambaling. So the one in Mambaling is 082, if I'm not mistaken. And then you go down south, you have BIR Talisay. BIR Talisay is RDO 083 and so on. So BIR has a lot of RDOs, Revenue District Office. Okay? So we have here powers of the commissioner. Commissioner here refers to the Commissioner of Internal Revenue. So the CIR has the power to interpret tax laws and decide tax cases. The CIR also has the power to obtain information and to summon, examine, and take testimony of persons. So dito ka mag under oath. So for example, if the BIR is investigating a taxpayer nga they are what do you call this? They have an information that this taxpayer is not declaring taxes correctly, so they need to make an investigation. And let's just say you have you have um, a material information concerning that taxpayer. So BIR can send summons. Makadawat na lang kag summons sa imong balay. Okay? BIR can summon you. Then you will go to the office and then examine. They will examine you and take your testimony under oath. The CIR or the Commissioner of Internal Revenue can also make assessments and prescribe additional requirements for tax administration and enforcement. He can also delegate powers vested in him by the code. Code here is your National Internal Revenue Code. So the code being referred to here is your NIRC. To any subordinate officer with rank equivalent to a division chief or higher. Later on, we will look at Section 7. I think it was Section 7 of the NIRC to supplement our learning of the powers of the commissioner. Then the CIR also has the power to suspend business operations of a taxpayer. So if a certain taxpayer has breached, has significantly breached a tax law, then the commissioner can order the business closed. We call it oplan candado. So for oplan candado o kandaduhan, I mean the CIR can suspend operations of the business, and then it will only be lifted once they can settle their tax liabilities. Then the CIR also can compromise, abate, and refund or credit taxes. When you say compromise, compromise is like saying, it's like, murag, nihangyo ka ba? Example, BIR has assessed you nga, you still owe BIR 1 million taxes. Then you would say, can I just pay 800,000 because currently I'm having some losses due to the pandemic and so on. So you can haggle with the BIR. So the Commissioner of Internal Revenue can grant a compromise. So you can execute a compromise agreement. So instead of paying 1 million, pwede 800,000 na lang. That is compromise. When we say abate is really to cancel out your liability. So example, you owe the commissioner um 100,000, and then uh you you defend, like you saying, this tax is erroneously imposed upon me and so on. So and then if the commissioner can be persuaded by your argument, then the commissioner can cancel your liability. Cancel is abate. Abate. Okay, refund or credit taxes. So if you have paid excessive taxes erroneously, then you can ask for a refund. Refund or credit, same thing with respect to their effect, but different as to technicalities. So when we say refund, CIR will really give you money, will return the money to you. Credit, on the other hand, is CIR will just give you a certificate. We call it tax credit certificate, TCC, tax credit certificate, which you can present later on if you incur additional taxes in the future. So, for example, you overpaid 100,000, then the BIR will say, "We do not want to return your money. Let us just give you a TCC." So let's say you have now a certificate saying you have a credit of 100,000. So for example, a year after you become liable to pay other set of taxes, you can use your certificate to pay for those taxes. Okay, that's your TCC. Okay, let's stop there. After this call, I will be publishing your first quiz and your first assignment. So you have entire 7 days. So the deadline for you to answer the quiz in Canvas and to upload your assignment is on Friday next week up to 11:59 p.m. So you have the entire week to do it. And then, um, can we meet on our original schedule is TTH, right? TTH 7:30. Can we meet on Tuesday? TTH ba? Tama.
Yes, miss.
Okay, let's meet on Tuesday, guys. Since it's 7:30, my very early, no. Let's just have it at 8. So 8 to 9 on Tuesday. Okay, para makakatch up ta sa to lessons.
Miss, I have
Yes.
question.
Yeah.
Right, you're recording this discussion. Will you be posting it on our platform Canvas for kind of reviewing?
Come again. So you are recording this, right, Dayon? What's your
I
question?
know you're recording this discussion one Miss now. Will you be posting it on the Canvas platform for the students to
You
review?
mean the recording itself?
Mm-mm.
I'm not the one who recorded this. Who
Oh,
recorded it?
oh, no, because I see a recording button on the top right.
Yeah, I also see it. I thought
Uh-uh.
someone